Here with us now is Luke Ellis, CEO of Man Group, a global active investment firm with more than $143 billion in assets under management. And we get to take our pick. Could be a credit event, which brings us down. Could be just earnings. Could be margins. Could be a lot of things. But you think that the October lows eventually are broken?
Yeah, I think it's that bit that trying to imagine that there is some perfect landing which doesn't have an accident just doesn't seem possible to us.
Well, not after the last 2 weeks.
No, and that's, so look, we weren't thinking credit was going to be the cause, but clearly there's a lot going on in the banking sector and the credit sector. More likely earnings is the cause, but now we've got what's going on in banking. Either rates have got to go back up because inflation's not cured, or if rates are right, then that means we've got an earnings recession coming, which means we go lower.
What happened? I've got like a frog. I think Kramer couldn't talk for a day. He had to take off, but something going around, lasting. But
welcome to the set.
Yeah, and I don't have a cough switch. That used to be. I mean, we can put a man on the moon, Luke, but we don't have a cough switch, so everything goes out. The banking situation, in your view, isn't over. You think that small banks, community banks, it's going to be even harder for them to compete at this point. Is it all about staying at zero for so long that there's all this duration risk in just everywhere? Is that what it is, or what is it?
Well, you got two different bits there. So we have duration risk. We've got carry everywhere, and carry's sort of broken now. And anybody who's built carry into their business, whether it's a bank or other things, that their earnings picture looks horrible. But the thing in the regional banks and small banks everywhere is, we've just gone through a process of saying that depositors in the end need to be socialized. You can agree or disagree. I know you have strong views about it.
Right.
But in the end, when pushed at the idea we would let depositors lose money, central banks stepped in. The reality is that means that there is sort of, the regional banks are now going to get a form of regulation which makes it as hard for them as GSIPs. But the big banks have the advantage of scale, of diversification. Yeah. So sort of how does the small bank compete?
Right. You're right. I mean, we can't afford 17 trillion of socialized. That just means more money printing and more inflation and lower growth, and it's just bad for everybody to even talk about that, implicitly or explicitly.
Yeah, but the reason that there is an implicit guarantee of all these things is because of what we heard yesterday in the testimony. The idea that $46 billion was drawn out of SVB in one day. The next day was $100 billion. In deposits that were wanted back and withdrawals. You can't have that happening, a run like that. The idea is you have to say that this is not going to happen. Otherwise, everybody everywhere would have pulled their money out of banks, and you would have had...
Well, so that's the reason. I mean, they put a fire break in because they thought it would spread to other things. You could argue SVB had a pretty unique business model, but there are other people like it. But it's sort of... I guess I don't spend much time worrying about what they should do. I worry about what they're going to do. Governments have clearly said, in the US, but it's true in Europe as well, they've said that if there's what looks like it might be a bank run, they're going to put the brake on very early, which means, the next thing that's going to happen is more regulation on the banks here and on smaller banks in Europe that's going to tighten their standards to being the same as they are for JP Morgan and Bank of America. And then why would you have your deposit at a regional bank rather than with the big bank?